Edward Brown, host of The Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. We're going to be talking about mortgage pool funds. You're not going to want to miss this show. That's The Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is miscellaneous trivia. Now, before I introduce my guest, who was a famous co-host for many years on the show, I do have to say one quick thing here. This is kind of funny. So there's a cryptocurrency entrepreneur named Justin Sun who paid over $6 million on some artwork. And what was that artwork? Was it a Rembrandt? No, it was a banana duct taped to a wall. And he plans to eat the banana. Now, I'm wondering if that doesn't that devalue the art. And he better eat it fast before it goes brown. And by the way, he outbid 6 others at Sotheby's. And of course, he paid for it in crypto. I thought that was kind of cracked.
I don't recommend that as an investment.
Yeah, I don't think so. Okay. And who was that talking in the background? That's Mark Hanf, president of Pacific Private Money, who started this show with me way back in August 2010. Yeah. And he's been so busy that he had to kind of take a little breather for a while, but we have him on as a guest, as an honored guest. So Mark, welcome back to The Best of Investing.
No, it's great to be here again with you, Edward. And I appreciate that you kept the show going these years since I kind of retired from it. It did get hard for me to continue to do this particular type of radio show. We've pivoted to podcasts and other types of media, which a lot of companies have, but there's still, there's a really great argument for, maintaining, terrestrial radio. You and I are still big supporters and listeners of terrestrial radio, whether it's sports or whether it's hot talk or you name it. Yeah. So I'm glad to be back.
Well, it's like keeping my landline at home. I still have one just in case everything else goes bonkers.
I do too, but it's through Comcast, which I don't quite know how that all works. It's not the old AT&T copper lines anymore. It's
and it's so funny because for a long time I've kept this email that I've been waiting for you to come back on so I can ask you. But tell us, before I ask you this email, tell us what's going on with Pacific Private Money, the marketplace. How are you guys doing?
Well, we're, celebrating our 17th year in business. We started in 2008. So we had our 16-year anniversary last summer. And so, like I said, we're in our 17th year of making hard money loans, private money real estate loans, alternative real estate loans, whatever you want to call them. They're basically short-term real estate bridge loans funded by private capital. That's really, that business model hasn't changed from the get-go. What's changed over the years, and especially over the last 5 years, is that we went from having one mortgage fund, the Pacific Private Money Fund, which we talked about a lot on The Best of Investing over the years, to now we have 4 different offerings, each fund specializing in a different lending or investment strategy. All 4 of these funds are private placements. They're referred to as alternative investments, and they're available for accredited investors. And we're paying anywhere from 7 to 10%, depending on the fund and your level of investment. But they're all secured by real estate loans. That's what they all have in common. And so we're pretty, we're pretty excited about that. We've weathered a number of storms, and we're still smiling.
All right, we're going to go to our first commercial break here. The trivia theme is miscellaneous trivia. And just to let Mark know, some of these questions are hard. I got to say, they are kind of hard. Which country is home to the world's oldest hotel? And if you give me the year, I will be blown away.
You must think I'm a Trivial Pursuit leader here.
Okay, call 888-912-1190. The first caller with correct answer wins that tanning certificate. Again, the trivia question is, what country is home to the world's oldest hotel? And want to make a quick mention here for Mountain Mike's Pizza in San Rafael. Pizza, the way it ought to be. Check them out at Mountain Mike's Pizza, sanrafael.com. That's the specific location, Mountain Mike's Pizza, sanrafael.com. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my special guest and previous co-host, Mark Hanf of Pacific Private Money. First, we're going to answer our trivia question. What country is home to the world's oldest hotel?
I'm
Any
just going
idea?
to randomly answer. Istanbul, 1595.
No, well, first of all, the year was 705 AD.
Oh my
I'm
goodness.
guessing it's probably not still around. Japan.
Really?
Japan, 705. I do want to make a
Clever.
mention here also for the Transcendence Theater Broadway Holiday Show, December 18th and 19th at the Sebastiani Theater in Sonoma. Check them out. I think they're also doing one in Marin, but you got to check them out at bestnightever.org. And due to popular demand, they're adding two more shows. So again, bestnightever.org. All right, Mark Hanf of Pacific Private Money. Now, you mentioned in the first segment basically what you do. So I'm going to ask you this email because I've been waiting for a long time to ask you this. Why do you get referrals from mortgage brokers? Aren't they in competition, or aren't you in competition with them?
Well, when you don't understand the private lending business model, the bridge lending business model, that would be an obvious question. And so, and we get it a lot and still get it to this day. Why would anybody go to you guys, when you can borrow from a bank? Why would someone borrow money from Pacific Private Money at today's, private money rates of say 11%, which is about average right now, when bank loans are at 7%? And the reason is several. One is we tend to lend to real estate entrepreneurs, and real estate entrepreneurs are always looking for opportunity, whether it's a fix and flip or some kind of distressed opportunity to close quickly. And you can't get quick capital from a bank nowadays. Banks are lending generally longer term mortgages, and they don't really work like they used to with real estate investors. So we've become, we meaning the alternative real estate lending community, the private lending community, has become the go-to resource for capital for people who are looking for a fast, efficient way to acquire real estate. We really help people grab the property, get the property. Once you have it, if you want to own it long term, if it's rental property, you can get any number of what they call DSCR loans, which are just basically debt service coverage ratio loans. I don't know why they use such a horrible acronym, but that's what they're called in the industry. So you can get rental property loans. How about that for a non-acronym? You can get a rental property loan, or if you're buying a property and you decide as you're fixing it up, well, I want to live there. So you decide, then you can go to a bank, go to any number of mortgage brokers and get a loan. But mortgage brokers send us leads because they get to keep the client. We don't take their client away. We'll give them a bridge loan. We'll give them a way to acquire the property. And it's generally on a loan that's going to be required to be paid back within 12 months. And so this way we help them get the property. They've helped their client. They've given them a reason to stick around. And then that mortgage broker will be able to then refinance that property into a longer term, either investment property, or if they decide to move into it, they can get their own conventional residential mortgage. So that's really where probably about 75% of our deal flow comes from other mortgage professionals or even real estate agents. And then the rest would be just people who find us on Google or other searches or referral and call us directly.
Even from banks too, as I understand it.
Well, sure. Yeah. They did. And I guess the thing Dodd-Frank was intended to be a friend to borrowers and homeowners to keep those nasty banks from making those horrible loans, that those neg-am loans and other crazy loan products that were in the heyday of the early to mid 2000s. And so we really we exist because banks decided to pull out and not make those loans. So Dodd-Frank really legitimized private lending in a way. A lot of the bad actors that were, making illegal or usurious loans, they went out of business or they left. And now what you have are companies like Pacific Private Money who've been around for 5, 10, 15 years, who are really taking advantage of a hole that was left by the fact that many banks and mortgage companies kind of pulled away from making certain types of loans, like ground up construction, like fix and flip, like, buying an empty commercial building, small balance commercial. I mean, there's all kinds of loans that we can do here. If it's real estate and we like you and we like your plan and you have an exit strategy, then we're going to seriously look at your loan application.
Okay. And from the investor standpoint, you have the ability to offer the clients, potentially people who are listening to this show, a way that they can invest their savings or retirement accounts for a lot higher yield than they're earning in the bank. We're going to tease the audience a little bit because we're going to go to a break in about 30 seconds here. But generally speaking, okay, you said you have 4 different funds. What are the interest rates range? And then we'll let you explain why there's a difference in the interest rates.
The lowest amount we offer is 7%, and that's for an entry-level investment in one of our funds. And the highest we offer is 10%, and that's available for larger investments of, say, $1 million or higher. And it just depends on their risk appetite, I guess is one way to put it.
Okay, then when we come back, you can explain the various funds and requirements. Okay, second trivia question. This one was a tough one because I didn't get it. That's why I know it was tough. What was the name of the first social media website? Okay, and I give you a hint, but I don't know if this helps. It was launched in 1997. What was the first name? Excuse me, what was the name of the first social media website? Call 888-912-1190. The first caller with the correct answer wins that tanning certificate, which is, by the way, worth about $100. So it's a nice little gift we're giving away. All right, stay with us. You're listening to The Best of Investing. Do not touch that dial. We are going to be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with my special guest, Mark Hanf, president of Pacific Private Money. Our second trivia question, what was the name of the first social media website? Launched in 1990.
I'm thinking it was maybe a bulletin board, which I remember those because I was an early user, an early adopter of the internet. In 1993, I had my first account, but I'm going to guess MySpace. I don't think that's the answer, though.
No, 6 Degrees. I never even heard of that.
No, I have not.
Like I said, that was a hard one. The next question will be a little easier, but that's okay. All right. So Pacific Private Money, you have 4 different funds. Give us a little background on each.
Little taste of each. So we have a fund called the Freedom Fund, which we use as like an internal source of capital, like a credit line to close on loans that we intend to sell on the open market. And the Freedom Fund offers 7, 8, and 9%, depending on the amount you invest. And for people over $1 million, we can pay as high as 10% on that. That's a monthly distribution, fixed rate. So it's a fixed income instrument where the interest gets paid to the investors first. That's before any management fee. So we really like, and those have been those fixed income funds have become very, very popular because you know what to count on. And we also have another fixed income fund, that's the Pacific Southwest Fund, that has a lower barrier to entry, $50,000 minimum investment. Any investment in that fund is 8.5% fixed with monthly distributions, and that one's secured by notes that we purchase on the open market, not loans that we've originated internally. So, over the years, as we've been in business, we've acquired relationships with people who've offered to sell notes, and we take advantage of buying notes, oftentimes at a discount, so that we can have a fund that, again, will pay an 8.5% fixed return, secured by low loan to value real estate notes. And then we've got a construction lending fund called the Opportunity Fund. that is paying right now, we're offering a 10% preferred return on that. That has quarterly distributions. And then that is not that 10% is a preferred, not fixed. So it differs a little bit from the other funds where there is a management fee that's paid first, which is kind of traditional among most mortgage funds you'll see out there. And then a 10% preferred return, and then an 80-20 split of any profits above that. So again, but think of the 10% because that's really what the average return on that opportunity fund. And then last, we have a new fund called the Arrival Fund 1 that is also paying 10%, but that's a smaller fund. We're only raising a certain amount of capital in that fund. That is for one of our divisions called Arrival Home Loans, and that allows them to fund and close loans that they're going to put then on our line of credit. And so again, there's a little, each fund is nuanced a little bit, and we do have flyers, and we've got executive summaries, and of course the offering memorandums for all of those. So each of them have a different risk profile. Each of them focus on different types of mortgages, and that's why we ended up having 4, where many companies in our position, they just have one big giant fund as opposed to ours, which are all managed by different managers who specialize in those specific areas of focus.
And you've said you've done about two, I think, did you mention you did about $2 billion?
Yeah, we've done over $2 billion in private loan origination since 2008. All of that with private money. No investor has ever had a loss of principal investing with us, and so that's really important to know. So that's a track record that we're not intending to blemish. And we started by doing individual notes with investors who wanted to invest directly in notes. In California, that's often referred to as trust deed investing. We still do some of that. So for people who do not want to invest in a fund for whatever reason, and there are people who have strong opinions about commingling their capital with into a fund, and they would rather just own individual notes. There is more work to that. They're harder to get because they're popular among folks who can make quick decisions, but there is an opportunity there. We've got a website called privatemoneyloans.com that offers those. So again, it's just they're all mortgage backed. It's a way to participate in real estate without owning real estate. So we think that's a pretty interesting attraction. There are some tax benefits to investing in a fund. You do only pay, thanks to something called QBID, you only pay taxes on 80% of the income, not 100%. So it boosts your yield a little bit from the stated rate.
All right. We're going to go to one more trivia question here, and then we'll come right back. Who was the first American woman on a U.S. postage stamp? Call 888-912-1190. First caller with the correct answer wins that tanning certificate, which is kind of interesting. This happened in 1902 on an 8-cent stamp, which was actually kind of expensive back then, if you think about it. All right. Stay with us. The Best of Investing will be right back. Welcome back to The Best of Investing. Edward Brown here along with Mark Hanf. Third trivia question. Who was the first American woman on a U.S. postage stamp? 1902.
Well, I was going to say Amelia Earhart until you said it was 1902. So blew my guess.
Martha Washington.
Oh, Martha. Yeah. I remember her.
Okay, you ready? I got a silly joke here I like to tell.
Okay.
All right. Sherlock Holmes and Dr. Watson went on a camping trip. After a good meal, they laid down for the night and went to sleep. Some hours later, Holmes woke and nudged his faithful friend. Holmes said, "Watson, look up and tell me what you see." Watson said, "I see a fantastic panorama of countless stars." Holmes says, "And what does that tell you?" Watson pondered for a moment. "Astronomically, it tells me that there are millions of galaxies and potentially billions of planets." "What else?" "Well, astrologically, I observed that Saturn is in Leo." "What else?" Horologically, I deduced that the time is approximately 3:15 in the morning." And what else? "Well, theologically, I can tell you that I can see God is all powerful and that we are small and insignificant." And he says, "Well, why? What does this tell you, Mr. Holmes?" And Holmes was silent for a moment and then said, Watson, you idiot! It tells me someone stole our tent. I'm sorry. That's to me that's funny. It's always you always have to have kind of a fun, silly joke here. Okay,
Yeah.
Mark Hanf of Pacific Private Money. What kind of restrictions are there to invest in your fund? And if people want to get out, how long do they have to keep their money in?
So most private placements that are advertised in America are only available for accredited investors. And what that means is you need to have a net worth of $1 million or an annual income of $200,000 or higher. So the government does place a restriction on that. And that's because we advertise it publicly. So these are publicly advertised opportunities. Once your money is in there, we ask you to keep it in for 12 months. There's a minimum, what they call it, a lockup period. All private placements are regulated in this manner. They have a minimum. When you create a fund, when you create a private placement, the minimum lockup required is 12 months. But oftentimes, if it's a real estate private placement that you may have seen, they may have a 2, a 3, or even a 5-year lockup. So there are other ones that are more restrictive, but we try to make it as easy as possible for someone to invest. So 12 months in, then on the way out, a redemption request is placed, and it could take anywhere from, depending on the size of your investment, it could be as quickly as 30, 60 days to redeem your money. If it's larger, for those who've invested $1 million or more with us, it might take a few months. It might take 90 days to pay that out. So these funds aren't designed to be liquid. They're designed to be used for to allow us to make mortgages. So I wouldn't invest in one of our products if you absolutely had to have your money within a certain period of time. But they are designed to be above market, high yield, fixed rate options for investors to consider, backed by real estate.
I do want to make a little clarification. The requirement for investing, it's $1 million exclusive of your home of net worth, and
Thank
then
you.
if you're married, that's right, the income is 300,000. So I just want to make that little clarification on that.
Is that for? But I think it's different for single versus married. That's why
Yeah,
it's worthwhile to.
yeah, that's what I said. I think I said married. So 200,000 if you're single, 300,000 if you're married. Just
Yeah,
just wanted to give that a little clarification
absolutely.
there. Okay.
Want to talk a little bit about what we see in the future, a little crystal
Yeah,
ball for
absolutely.
2025. And
But before we do that, yes, absolutely. Before we do that, though, give out your information in case people are interested in getting in touch with you.
sure, pacificprivatemoney.com, pacificprivatemoney.com. We have a lot of information on that website, including all of the funds we invest in. There's a lot of tabs on there. We have a lot of podcasts that we've done and webinars that are on that website that you can download. So there's a lot of information, a lot of good information that you could do your due diligence on.
And you've written a couple of books too, haven't you?
I have the one behind me. I can see that my camera is mirrored. So that's called the the
Yeah.
power of bridge loans. Yeah, the power of bridge loans. You caught me there. I had a tongue twist there on the name. I actually wrote that, co-wrote that with one of our top agents and released it 2 years ago. And it just talks about one of our most popular loan products that helps people buy their next home.
Okay. Okay. So now we're crystal ball. What's going on? We just had a new election. What does your crystal ball say?
Well, interestingly enough, whether you voted for Trump or not, I know a lot of people in California did not. It certainly looks like, from early returns in the stock market and the way countries are reacting, there seems to be a lot of optimism, at least for the economy.
Yeah.
Notwithstanding, what you think of some of the individuals that are being asked to potentially run major departments. There's a lot of excitement in well, I shouldn't say excitement. There is excitement in cryptocurrency. If you happen to be an investor in Bitcoin, it's looks like it's about to hit 100 grand. But in terms of real estate and mortgage rates, which we track, no one expects anything remarkable to happen in 2025, other than 2024 was a low in home sales across America. The expectation is anywhere from 5 to 10% uptick in homes sold next year, but that that depends on how low real estate mortgages go. If they're still at 7% a year from now, it's probably going to look a lot like 2024. But I have seen predictions as low as the high fives, 5.75, by one pundit who
So the
believes
3%
that
is probably not going to happen, huh? For a while.
probably no, not well, at least not in a normal, not unless there's a shock to the system.
Gotcha.
Yeah.
All right. Stay with us, audience. You're listening to The Best of Investing. I'm Edward Brown, along with Mark Hanf, president of Pacific Private Money. Stay with us. We're going to be back with some more notes and closing comments, so don't touch that dial. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf, president of Pacific Private Money. And Mark, you were talking about the direction of the market.
So we have a lot of requests for construction loans. So there are people that are taking advantage of some of the new laws that have been passed in California over the last couple of years. So you may have a lot that's got extra space, and you can now divide that lot into two lots and build two homes. And each home can have its own ADU. So you could actually end up having 4 units. So we see a lot of requests for lot splits, and for ADU construction, or acquisition of existing properties where the buyer, the real estate entrepreneur, so to speak, sees an opportunity to add value by doing a lot split and adding another home. So we see a lot of that demand. So we're not, as a company, we're agnostic really to, if interest rates, go down as far as we hope, or whether they go up again, because we know that there's always a demand for capital. There's no such thing as a bad real estate market for a real estate entrepreneur. That's really key. And most people don't realize that real estate entrepreneurs out there will always take advantage of what's happening in the marketplace. Years ago, multifamily was the hottest thing in town. Today, it's ADUs and lot splits. The other thing is, one of our most popular loan products helps people buy their next home if they have equity in their existing home. It's not for first-time home buyers. It's for existing home buyers who don't want to sell their house first to buy their next home. They want to buy their next home first and then move in. And so we've got a special loan product that taps the equity in their existing home, and we can make a loan to them, a bridge loan, for as high as 100% of the cost or price of the home that they want to move into. And again, that's an exciting loan product. And it's we think that's going to be very, very popular in 2025 as more and more people re-enter the home buying marketplace as interest rates, as we predict, soften.
Yeah, I can see where a lot of people have loans that are really good interest rates, 2, 3, 4%, and they don't want to get rid of those loans. So if it's more beneficial to them, like you said, to do a lot split, build an ADU, remodel their home, that sort of thing. So I can
No,
see that.
absolutely. And yes, there is, that those people that are locked into their homes with low rates, that does put downward pressure on home supplies. But builders are busy building in many communities throughout the country, and we'll see how this next administration supports home development, home growth, home building through tax incentives and maybe other incentives. So we'll see how that goes. It'll be interesting.
Trump was a real estate investor, so he probably likes real estate. So he probably wants to support the industry.
Well, he made a lot of promises, so it'll especially, and he's got about 200 things he's going to do on day one. So I don't know how he said he's going to do on day one.
Yeah, he'll definitely have to prioritize it. So, Mark, would you give out your information one more time in case people want to get a hold of you?
Sure, absolutely. You can reach. So my email and phone number are available on the website at pacificprivatemoney.com. All one word, of course, pacificprivatemoney.com. The phone number for our office is 415-926-4444. That's 415-926-4444. The lovely Andrea will answer the phone when you call, and we'll get you through to me or anybody else who can help answer any questions you might have on what we offer and what we do at Pacific Private Money.
Great. All right. Here's our thoughts of the day. We actually have 3 of them. So I saw a sign on a telephone pole that said, "Have you seen my cat?" So I called and said, no. I try to be helpful, And why do people say heads up when you should duck? Right? Think about that, right? And the best things in life are free, plus shipping and handling. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.